Welcome back, Rebels. You've arrived at episode 3 of the Mentorship Mastery Program here on intentional trading. If you're just joining us, pause now. Do not continue. Go back to episodes 1 and 2. That foundation is not optional. It is essential. This program is not designed for passive consumption. It is designed for transformation. Every lesson builds on the last. Every principle deepens the structure. To skip is to sabotage your own growth. The work we're doing here is sequential, intentional, and demanding by design. This is structured mentorship, not motivational content. We are not here to give you inspiration that fades. We are here to engineer transformation that endures. We are building you from the inside out through principle, conviction, and design, through identity, structure, and deliberate execution. Because success in trading is not the reward of emotion, it is the result of evolving internal architecture. You are not simply learning how to trade, you are learning who you become when your system is tested, when your psychology is stretched, when your integrity is challenged. The market is not just a financial arena, it is a psychological battlefield. It will expose what you trust, what you fear, and what you know at your core. And that is why intentional trading exists. This channel is not for the impulsive, not for the reactive, not for those hoping the market will reward desire over discipline. This is for the architects of their own probability, those who know that structure precedes success. Here, we construct traders who outlast storms, external or internal. We design behavior that performs under pressure. We cultivate a mindset grounded not in hope, but in intention. Because storms are not a question of if, they are a question of when. And the trader who survives them is the trader whose structure was built for them. Before we go any further, your first action is simple: subscribe. Then enable notifications. But don't do it out of habit. Do it as a declaration, as a contract. This is your call to engage. And engagement is the price of transformation. Not scrolling, not passively consuming. Participation, reflection, application. Rebels, do not misunderstand. This is the beginning of who you must become. And every decision from this moment forward determines whether you are building a temporary excitement or a permanent model. The market will test your structure. We're here to make sure your structure wins. Now, let's begin. Let me ask you a question that cuts deep, one that most traders avoid because answering it forces them to confront themselves. What happens when a trader builds a system, but never builds the self to protect it? Have you ever watched yourself betray your own rules and then justified it? You told yourself it was just one trade. You blamed the volatility. You blamed the timing. You blamed the market. But let's be honest, that betrayal didn't begin in the chart. It didn't begin in the uncertainty. It began in the mirror. There is something profoundly unsettling about watching a trader violate the very structure they claim to believe in. A trader who holds a plan in one hand and a sabotage impulse in the other. A trader who knows what to do but does the opposite when the pressure hits. It reveals a split identity, an internal conflict, a hidden war beneath the surface. And today, Rebels, we go into that battlefield. Because until the internal war is resolved, no structure, no strategy, no system will ever save you. This episode is titled "The Trader Without a Code: Why You Keep Betraying Your Own System." Because this is bigger than entries and exits. This is identity versus impulse. This is structure versus sabotage. This is intention versus instinct. You can build the most sophisticated strategy in the world, but if your internal architecture is inconsistent, emotional, reactive, you will betray that strategy every single time. And here's the painful truth. Most traders don't lose to the market. They lose to themselves. They lose to untrained impulses, unchallenged biases, unresolved fear. They lose because they never built a self strong enough to uphold the structure they designed. Because structure is not enough if the person executing it isn't aligned. You want to know why discipline feels so hard? Because discipline isn't just about doing the work. It's about becoming the kind of person who does the work automatically. You want to know why you repeat the same mistakes even after promising yourself you wouldn't? Because promises made in calm waters collapse in storms if you were never built for the storm. You want to know why you keep moving your stops, adding to losing positions, skipping journal entries, taking random trades, and then saying, "I'll do better next time." Because there is no next time until identity changes. And identity does not change by information. It changes by structure, applied internally as much as externally. So today isn't just strategy. This is surgery. We are cutting deep into the core. To truly grasp the power of structure, we must journey beyond charts, entries, and exits. We must return to an ancient and foundational truth, one older than trading, older than economics, older even than strategy itself. Every sustained structure requires ethics. Every system that stands the test of time, every architecture that withstands pressure, every model that endures uncertainty, it all depends on a moral code. Ethics is not an optional embellishment. It is the supporting spine. Without it, even the most brilliant structure becomes hollow. Remove ethics from execution, and you do not simply weaken your model, you deform it. You don't become less effective, you become dangerous to yourself. You might still move, but you will move like a serpent, unpredictable, reactionary, unstable. Your behavior becomes governed by impulse, not principle, and every impulse quietly erodes your structure. Trading without ethics is identical to trading without true rules of engagement. You may have rules written in documents and journals, but rules alone are just ink, dead language, unless a code of personal honor enforces them. The discipline isn't in the writing of rules, it is in the obedience to them. That obedience is ethical. In military doctrine, rules of engagement are not created merely to govern action. They are designed to govern power. They serve as ethical boundaries. They limit what force can do, even in war. Without them, the soldier becomes indistinguishable from the threat he was trained to eliminate. Power without ethics becomes violence. Skill without ethics becomes manipulation. Strategy without ethics becomes exploitation. In trading, the same law applies. A system without ethics eventually becomes self-destructive. Because when you build structure without honor, that structure eventually turns on its creator. You begin trading against your own framework. You start justifying actions that violate the very boundaries that were built to protect you. You create loopholes, excuses, emotional overrides. And that slowly infects every part of your execution. That is not a failure of strategy. It is a failure of ethics. It is not a lack of knowledge. It is a lack of internal alignment. A model deserves ethics to stand within. A trader deserves ethics to stand upon. Because ethics is not simply about right and wrong. Ethics is the internal architecture that makes structure self-obedient. Now pause. Slow down your breathing. Think. Recall the last time you moved a stop loss, stretched a target, added size to recover a losing position. Told yourself, just this once. Told yourself, the market is acting strange. Told yourself, I'll adjust when it comes back. Ask yourself with clarity and without self-defense, was the market truly to blame? Or was it the absence of your own internal enforcement that allowed you to break your structure in the first place? Reflect honestly. Because where there is no internal enforcement, there is no structure, only suggestion. And where there is no ethics, even the most advanced model becomes a weapon aimed at its owner. You know the pattern. You set the stop loss with conviction, then shifted it just to give the trade room. You defined your target with intention, then stretched it because you felt the market still had more to give. You promised yourself a controlled 1% risk, and in a moment of adrenaline, that 1 quietly became 3. And what happened? The market didn't punish you. In fact, maybe it rewarded you. The trade went your way. You survived. You even booked a profit. And that's when the true danger began. The brain whispered, see, you're in control. You're different. You can override structure and still win. But that victory was an illusion, a distortion, a seductive lie. Because from the moment you abandoned your code, structural corrosion began. The discipline you thought you possessed began quietly eroding, and that erosion is not dramatic, it is silent. These are micro-betrayals, the tiny fractures of integrity that go unnoticed until the entire architecture collapses. Micro-betrayals are not loud, they whisper. They are not explosive, they accumulate. They are the smallest apostasy of the trader's mind, a departure from alignment, not because the market was difficult, but because the internal structure was weaker than the impulse that tested it. The sabotage did not begin when price moved against you. It began the moment you forgot who you were supposed to be when tested. The moment your trading identity deferred to your emotional reflex. This is the deeper truth. Your trades are not merely execution, they are identity expression. Every decision reflects who you are under pressure. Every adjustment reveals what governs your behavior, structure, or emotion. If identity is not anchored in a code, your strategy is rhetorical. It sounds intelligent, but it lacks authority. Your system becomes theater, performance without conviction, and the trader becomes an actor, not a practitioner, a performer of discipline, not an executor of structure. The real risk is not losing money, it's losing alignment. The danger is not in the trade, it's in the internal betrayal that happens quietly, one small violation at a time. Because with every micro betrayal, your structural confidence erodes. And when confidence erodes, hesitation grows. When hesitation grows, execution fractures. When execution fractures, your edge evaporates. And when the edge evaporates, no amount of intelligence or analysis can save you. You do not blow accounts through major mistakes. You do it through repeated microscopic losses of identity. The breach happens long before the loss. It begins at the level of thought. A trader without integrity of structure is a trader without a future. Not because the market is ruthless, but because sabotage within is unaddressed. Rebels, this is structural psychology in motion. This is where self-awareness matters more than any indicator or setup. Because every time you honor your structure, even when it's uncomfortable, even when the outcome is uncertain, you fortify your identity. When you protect your code, you protect your future. And that protection starts with the smallest of moments. No betrayal is small. Every violation has a cost, but every moment of alignment sets you free. Structural sabotage in trading is rarely dramatic. It rarely announces itself with fanfare. Instead, it creeps in silently, in moments that feel tactical or adaptive. Over time, these seemingly minor deviations accumulate, undermining your entire framework. Compromise is subtle, but its consequences are systemic. Let's break it down carefully. Structural sabotage appears in three principal forms. 1. Ignoring stops. This is the most common form of betrayal against your own structure. You place a stop because the system, the plan, and probability dictate it. Yet in a moment of hope, or perhaps fear, you think the market won't reach it. I'll give it more room. It feels tactical. It feels like prudence. But in reality, you are gambling with more than capital. You are gambling with trust in yourself. Each time you move a stop, you teach your mind that rules are negotiable, that design is optional, and that instinct supersedes procedure. That single exception is the first crack in the covenant between trader and system. 2. Shifting targets. You enter a trade with a clear profit target. The system, your predictive design, and your probability framework all align with that target. And then the market turns or hesitates, and suddenly the target feels unrealistic. You adjust it, you compromise. It may feel adaptive, clever even, but this is a betrayal of predictive design. You agreed to a scenario, to a framework, and then reneged when it became inconvenient. Each shifted target weakens the alignment between expectation and execution. Predictive power is not built on flexibility alone. It is built on adherence. When targets are moved on a whim, you are no longer trading probability, you are chasing desire. 3. Expanding risk. Perhaps the most destructive compromise is inflating risk. You exceed your predetermined size. You add exposure beyond agreed limits. You justify it. The market is trending. I'll take advantage. The market is unforgiving toward inflated risk. Consequences escalate exponentially, not linearly. One compromise in leverage can turn a minor loss into a catastrophic drawdown. Beyond the numbers, this is an erosion of discipline. By overriding boundaries, you signal to your mind that structure is secondary and impulse is primary. The domino effect. Each compromise is small, but accumulative. Exceptions become precedent. Precedent becomes habit. Habit becomes collapse. By the time you realize the breakdown, it is no longer about a single decision. The pattern has already dissolved the covenant between trader and system. The structure you once trusted is compromised. Execution becomes reactive. Emotion regains control. Probabilistic advantage vanishes. This is the anatomy of compromise. It is subtle, seductive, and systemic. It begins with small rationalizations, but ends with structural collapse. And the market, relentless and unbiased, never forgives the decay of internal order. Rebels, Take a moment. Review your recent trades. Ask yourself, did I respect every stop, every limit, every pre-agreed boundary? Did I move targets because I believed the system was wrong or because I wanted it to be right? Did I ever increase risk beyond the plan thinking I could outsmart the market? Each yes is a signal that compromise is present. Awareness is the first step to repair. Recognition allows you to rebuild trust in yourself and in your structure. True mastery is not just knowing the rules, it is respecting them under pressure, without exception. Understanding sabotage is only step one, rebels. Recognizing the moments when you undermine yourself, the impulses that hijack your best intentions, is essential, but it is not enough. Step two is far more profound, building a moral code. A moral code for the trader is not some abstract virtue or a philosophical ideal. It is not vague guidance or optional behavior. No, rebels, this is an operational framework. It is precise, actionable, enforceable, a living architecture for your decisions under pressure. A moral code is the unbreakable agreement between who you are and how you trade. It is the contract you make with your identity. It enforces obedience when no one is watching, when the charts do not validate your judgment, when stakes are highest and the market is unforgiving. It defines what is negotiable and what is sacrosanct in your practice. Every rule you set, every boundary you enforce, every protocol you follow is a brick in the fortress of your intentionality. When this code is alive, truly alive, and rigorously tested, the market loses its ability to intimidate you. Fear becomes irrelevant because your internal architecture is stronger than external turbulence. The internal market, your psychology, comes into alignment. Your mind moves with clarity. Chaos surrounds you, yet it cannot penetrate your fortress of self-governance. You are no longer reacting to motion, you are commanding from a position of internal authority. Now, rebels, sit with that thought. Where are your fractures? Where have you allowed exceptions to slip through unnoticed? Where have you rationalized impulse as intelligence? Which trades were abandoned because discipline faltered, not because the system failed? This audit is uncomfortable, yes. It requires brutal honesty, but it is necessary. The cracks you ignore today will become collapses tomorrow. And here is where we shift from observation to action, from theory to implementation. We will explore how micro betrayals, the small compromises, the skipped rules, the rationalized impulses, compound over time into macro collapse. Each ignored guideline, each exception made just this once, becomes a seed that grows into inconsistency, hesitation, and eventual failure. But there is a path forward. There is a way to replace that destructive cycle with a living, enforced moral code. One that moves with you, evolves with you, and demands obedience not through fear, but through identity alignment. This code transforms small daily choices into predictable, replicable outcomes. It turns every potential impulse into a test of alignment. It makes integrity automatic, not optional. Rebels, the ground is about to shift beneath your understanding. What once was chaotic, reactive, and vulnerable is about to become structured, intentional, and unbreakable. The next phase is not about observation. It is about construction, about erecting a code so precise that sabotage has no foothold, so alive that hesitation and panic are neutralized before they arise. Take a deep breath. Prepare. Because when we move forward, you will not simply react to the market. You will embody the principles that make chaos irrelevant. All right, rebels, we continue. You've confronted micro betrayals. Now we expose how small deviations escalate into structural sabotage and how to reverse that trajectory. This is where identity, process, and enforcement converge. Imagine a trader with a flawless plan, every variable accounted for, stops precisely defined, targets intentional, risk perfectly calculated. This trader is a model maker in action. Every tick of the market has meaning. Every decision flows from design, not impulse. Every trade is a rehearsal of mastery. Then a whisper enters the mind, maybe just a little more. Perhaps a slightly wider stop, perhaps an extra lot, perhaps holding longer than the plan dictates. On the surface, each concession seems minor, harmless, insignificant. The mind rationalizes, I survived, I got lucky, it's fine. But rebels, every concession is a fracture. Every rationalization is a weakening of authority. The trader's model, once the master of decisions, slips from unquestioned command to negotiable suggestion. And once obedience erodes, everything becomes unstable. The model's true power is not in charts, probabilities, or patterns. It is in obedience. Obedience is the invisible engine that drives results. It is born from integrity, consistency, and adherence to code. Ignore that, and the system becomes negotiable, vulnerable not to the market, but to the trader's own mind. The market does not respond to intent. It responds to the strength of your obedience. When obedience weakens, the market enforces consequences. Losses are no longer accidents, they are lessons on the cost of internal disobedience. Discipline is the muscle. Ethics is the skeleton. Muscle without bone collapses. Strength without structure crumbles. The market applies force relentlessly. Every candle, every tick, every unexpected movement is a test. Without a guiding code, there is no compass to resist impulse. Chaos becomes the default. Doubt becomes authority. And subtle compromise becomes systemic collapse. Now, rebels, I want you to see this clearly. Close your eyes for a moment. Let's visualize a trade scenario where everything goes wrong. Price immediately violates your thesis. News hits the tape, creating volatility you did not anticipate. Your heartbeat accelerates and your mind screams, "Cut it! Change it! Hold on!" Notice the physical tension, tight chest, rapid thoughts, the pull of instinctive reaction. This is where many traders fail, not because they lack skill, but because they lack obedience. Now see yourself executing your code, your structure, step by step. You accept the invalidation of your thesis without argument. You take the defined loss without hesitation or negotiation. You journal the experience, capturing the lessons with clarity and objectivity. Feel the physiological shift. Your heart rate steadies, your mind regains clarity. A calm certainty returns. Chaos no longer dictates action because your structure has. This imagery is not theoretical. It is practice for your nervous system. It trains reflexes. It rewires instinct. It transforms reaction into deliberate execution. The more you internalize it, the more your obedience becomes unshakable. The market can no longer exploit hesitation because hesitation has no place in your code. Key takeaways for rebels. 1. Every small concession chips away at authority. One compromise can lead to systemic collapse. 2. Obedience, not knowledge, not luck, is the market's true test. 3. Discipline is meaningless without the ethical framework, the skeletal code that guides it. 4. Losses are the market's method of enforcing obedience. Gain is the reward for unbroken alignment. 5. Mental rehearsal of executing structure in chaos rewires behavior and builds immunity to emotional sabotage. Rebels, before any strategy, any indicator, any chart pattern, there is one thing that defines a true intentional trader: the operational moral code. This is not a philosophical suggestion. It is not a vague idea about discipline or self-control. It is operational. It functions like any technical rule in your system. It is precise, measurable, and enforceable. Let me make this unmistakably clear. The operational moral code is your covenant with yourself and the market. It is your line in the sand. It is the framework that governs your behavior under pressure. Here are the pillars of that code. Rebels, stated as commands, not options. 1. I will execute my system as designed. No improvisation, no shortcuts, no maybe this time. Execution must be faithful to the architecture you built. 2. I will honor stops without exception. Your stop is not a suggestion, it is a law. Moving it, delaying it, or ignoring it opens the door to chaos. 3. I will risk only what I defined. Every trade has a maximum exposure, and that exposure is fixed before entry. Your account cannot fund experimentation, only execution. 4. I will not shift targets based on emotion. Profit targets are set by logic and probability, not by hope, greed, or fear. You execute because your model demands it, not because the market tempts you. 5. I will prefer model integrity over short-term validation. The market does not reward emotional vindication. It rewards alignment with your plan. Integrity is always more valuable than a single winning trade. 6. I will measure every deviation and correct it immediately. Deviation is data, not denial. Identify it, understand it, and fix it before it compounds. Never allow exceptions to become habits. Now, rebels, we convert these into exact, non-negotiable parameters. Numerical stops define every stop in exact price units or pips. Risk per trade, explicit percentage of your account, always calculated in advance, entry criteria, precise conditions, timeframes, and triggers, management rules, how you scale, exit, or trail positions under defined scenarios. Every item must be documented, enforced, and ritualized. Your moral code is no longer abstract, it is operational. Let's turn this into actionable behavior. Step 1. Audit history. List every deviation, every emotional justification, every impulsive decision from your trading log. This is raw material, the blueprint of your weaknesses. Step 2. Define non-negotiables. Set hard numbers for stops, position size, entry alignment, and risk per trade. Define explicit scenarios where each rule applies. Write it down. Make it non-negotiable. Step 3. Enforce instantly. A single tolerated exception becomes precedent. Do not rationalize. Correct immediately. Options: reduce size on the next trade. Suspend trading for the day. Conduct a review with a mentor or accountability partner. Step 4. Ritualize adherence. Make ritual the scaffolding for habit. Pre-market review of your rules and triggers. Mental visualization of trades and stress scenarios. Live checks while trading. Post-session audits to capture deviations and insights. Step 5. Externalize accountability. Share critical elements of your code with a mentor, peer, or community. External eyes sharpen internal discipline and reinforce adherence. Your moral code is stronger when it is witnessed. Now, rebels, take action. Do not just listen, engage. Write one non-negotiable rule right now. It can be, I will never move a stop, or I will risk only 1% per trade, or I will not override the system under pressure. Commit it publicly, either in your journal, the comment section, or with a trading partner. This is not symbolic. Enforcement begins with a public vow. By externalizing your commitment, you anchor your discipline in reality. Remember, rebels, your moral code is not a static declaration. It is a living, breathing structure that governs your behavior. It is your line between reaction and intentionality, between chaos and command. Every day you honor it, you reinforce the architecture of your trading identity. Every day you deviate, you weaken the foundation of everything you seek to build. So write it, commit it, execute it, and let your operational moral code become the framework that transforms you from a reactive trader into a master of design, probability, and intentional results. Identity aligned with design, rebels. Hear this clearly. Enforcement alone will never suffice. Rules without internalization are just chains you drag behind you. They do not guide action. True mastery demands that your code lives beneath conscious thought. It must breathe through your actions, your decisions, your very presence in the market. This is achieved through ritual, through repetition, through unflinching honesty with yourself. Before the market opens, you do not simply read your rules, you embody them. Review every line of your playbook. Visualize execution so flawless that hesitation has no foothold. Identify the emotional traps, the biases, the impulses, the urges that will try to seize control today. Anticipate them, name them, neutralize them before they materialize. During trading, your awareness becomes both sentinel and guide. Monitor your adherence in real time. The moment you deviate, stop, correct immediately. Do not rationalize. Do not negotiate with emotion. Structure is not flexible because it is convenient. It is absolute because it is your identity in action. After trading, audit everything. Record every deviation, every justification, every corrective step. This is not paperwork. It is self-architecture. It is iterative refinement. Each reflection is a calibration of your identity against your design. Each adjustment strengthens the internal compass that will guide you through the chaos of the market. The trader with a code does not fear failure. They do not rely on conditions to dictate confidence. They seek certainty in themselves. Their moral code, the framework of integrity, discipline, and intentionality, is stronger than any market movement. It becomes the invisible force that governs behavior when external signals are ambiguous, when price behaves unpredictably, when the world seems determined to test your resolve. This is embodiment, rebels, identity aligned with design, execution that is no longer conscious. It is instinctive, precise, unshakable. And this ultimately is what separates a reactive trader from a model-driven creator of outcomes. This is where mentorship moves beyond instruction and becomes transformational. A mentor does more than tell you what works. They translate experience into a living, actionable framework. They distill years of trial, error, and insight into a structure you can follow. They show you where mistakes hide in plain sight, where impulses sabotage probability, and how disciplined execution becomes a force multiplier. But mentorship alone is not enough. The community, the network of rebels around you, enforces accountability. It tests your structure externally. When you share your code, your rule set, your weekly action plan, you expose it to scrutiny. And scrutiny, when framed as accountability, is one of the most powerful forces in the trader's arsenal. The market will always be unpredictable. The real question is whether your behavior will remain disciplined in response. Externalizing your structure, making your rules and intentions visible, binds you publicly. That binding is no minor detail. It is a structural lever of power. Accountability transforms intention into behavior. A written, shared plan is no longer just a mental exercise. It becomes a contract with yourself and with the community. Every deviation becomes visible, every success verifiable. Rebels, here's your first action. Post your action plan for the coming week. Define your entry rule, your stop level, your risk allocation, and your management approach. Let the community hold you to it. Let your plan be tested not just by price action, but by the integrity of your own commitment. Before we close, commit to one immutable discipline. Guard your code like your most valuable asset. Document it meticulously. Test it rigorously. Execute it with unwavering rigor. Enforcement is not punishment. It is the protective mechanism that preserves your identity as a trader. Without it, structure is theoretical, discipline is fragile, and results are random. Remember this: execution without structure is failure in disguise. Acting without rules, alignment, or design is not trading, it is gambling. Confidence without structure is illusory. The market sees it, it exploits it, and it rewards only those who act with deliberate intention, guided by a living framework that governs behavior under stress. This is not a theoretical lesson. It is practice, it is ritual, it is the formation of identity. You will be tested, you will be tempted, but when you combine a living moral code, enforcement protocols, ritualized practice, and external accountability, betrayal of your own rules becomes unlikely and consistency becomes inevitable. Final interactive assignments. 1. Audit. Complete a 30-day trade audit. List every deviation from your plan and annotate the emotion attached. Identify the triggers of doubt, fear, or impulsivity. 2. Define. Create 3 non-negotiables for your trading. Specify exact numerical parameters for your stop percent, position size, and entry filters. These rules are non-negotiable. They are your framework's spine. 3. Enforce. Choose one enforcement mechanism. Options include a daily audit, a trade freeze upon deviation, or mentor review. Implement it immediately. Treat it as sacred. 4. Share. Publish your one-week action plan in the community or comments now. Make it public. Let accountability catalyze behavior. Rebels, this episode concludes with a call to action. Turn knowledge into structure, structure into identity, and identity into sovereignty. The trader with the code does not merely react. He designs outcomes. He does not pray for consistency. He engineers it. Carry this code into the market. Live it in every micro decision. Refine it with each trade. Become the trader who enforces their own architecture, who executes with absolute clarity, and whose results reflect design, not chance. If this episode resonated, do not simply watch. Apply, document, execute, share. Intentional trading is not a channel. It is a movement. Your transformation begins now. Rebels, document your plan. Execute your design. Be intentional.